Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks and U.S. futures rebound from last week's sell-off as muted U.S. inflation helps reignite Fed rate cut bets. Panama rejects Donald Trump's threat to reimpose U.S. control over the Panama Canal after the president-elect complained American vessels are charged high fees. Plus, Japanese media say Honda and Nissan are looking to finalize a merger agreement as soon as June. NHK says Honda will pick the president of the holding company with Nissan. And it has just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai, back after a couple of days off. And it seems like I missed a lot of the market action last week with that much hawker than anticipated Fed. We got the spending bill drama. An agreement was agreed to essentially on Friday in the 11th hour, but still just kicking the can down the road another 3 months. And then, of course, we did have that softer than expected PCE print. So putting it all together, the upshot we saw a massive pullback for U.S. equities throughout the course of the week. S&P down 3%. Other global markets also down a similar amount. European equities down 3%. The dollar up 1% on the week. And then we saw a massive re-rating once more of U.S. yields, with 10-year yields climbing about 12 basis points. Only 38 basis points priced into the 2025 calendar year in terms of rate cuts. It was 65 basis points before that Fed meeting. So this is how things are looking today. S&P futures are leaning towards the green, up 0.3%. Euro stocks futures tilted towards the red, down 0.1%. We're going to be talking about the divergence between U.S. stock markets and other global markets throughout the rest of the show. The USD not doing a whole lot today, but of course coming off a much stronger than anticipated week last week. And then 10-year yield sitting at around 4.5%. So we've come back a little bit since that softer than expected PCE print on Friday. As for our terminal chart today, I thought this was interesting to highlight, namely talking about the global divergence. Look at this. S&P outperformance is set for its largest annual jump versus the rest of the world since 1996. If you just take a look at all of those green bars, the outperformance of the S&P this year has been spectacular. And yes, U.S. growth numbers have been stronger relative to most countries around the world, but that doesn't really account for the rationale behind the S&P outperformance. And of course, a lot of that is to do with AI and the hype around AI. So we will talk about that in the show as well. But for now, let's get a check on how markets in Asia are faring. Avril Hong is in our Singapore studio, and for the most part, the handover has been green today.
Yeah, really green. I mean, you talk about that AI theme. I think that is also figuring into Asia trade because the tech sector is leading the way, tracking Wall Street after the U.S. data stoked the Fed rate cut bets. But there are a couple of idiosyncratic moves as well. In Taiwan, there are local media reports that suggest that NVIDIA is looking to build an overseas headquarters on the island. So tech stocks there are really getting a boost. On the Chinese markets, we're seeing how local media reports of the state, or rather Chinese Premier Li Qiang, and how they're sort of advocating for chip as well as computing sector development. So that's lifting the stocks in that sector. So you're seeing gains across the board, but for slightly different reasons. Jumana.
Avril, thank you so much. Now, Panama's president has rejected President-elect Donald Trump's threat to reimpose U.S. control over the Panama Canal. Trump claims the waterway has fallen into the wrong hands and that U.S. vessels are being charged exorbitant fees.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete rip-off of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
Well, a new Trump grievance that we can talk about. Our news desk editor, Jill Deesas, joins us now. Jill, just break it down for us. What exactly is Trump upset about? And give us a little bit of historic context, because the U.S. did actually cede sovereignty to Panama around the Panama Canal in 1999.
Yes, it did, Jumana. So there's a lot of different bits of nuance that seem to be happening here. On the one hand, it seems, prices have been higher, in part, the Panama Canal, very crucial waterway for the world, also for the United States, which accounts for something about, maybe 3/4 of, the traffic and usage that actually goes through there. So it's really the biggest customer of the Panama Canal, China being second place there. So you have been seeing some higher fees. There's been some droughts recently that's kind of like, raised some supply chain pressures fed on through inflation there. But it also seems like what Trump is ultimately very upset about is what he calls this growing Chinese influence over Panama. This kind of, I think you can boil down to a couple of different things here. It is true that China has been trying to expand its influence in South and Central America. That kind of plays into this a little bit as well. Panama in 2017 stopped having diplomatic relations with Taiwan, for example, over some of those conflicts with China. And then you also have, while the actual Panamanian government authority does control the canal itself, there are various ports sort of around the canal, and a couple of those, do have, interest and controls by, some companies sort of linked to China, some Hong Kong-based company that actually has some of that issues there. So you do see, I think, some of those grievances kind of manifest itself in, the form of what Trump is talking about here. Now, what that ultimately means for the canal, very tough to say. There's not really a mechanism by which the United States would have just take control over the canal again. Various treaties are in place, obviously, including, as you mentioned, the handover about 25 years ago or so that really did put that firmly under Panama's control. Now, how Trump actually wants that to manifest, we'll have to see. We have seen just over the past few weeks some kind of ruffle some feathers for some other world leaders, and that's kind of led to some strange geopolitically. So what we'll see when that actually means Trump entering the White House, I think still a lot of lack of clarity there.
Yeah, and you've got to think that the association with China and those Hong Kong entities are key to his thinking there to unlock where this came from. On a slightly different tack, Jill, I just want to talk about the spending bill that was passed and agreed to on Friday evening. It's just a 3-month spending bill, so we're likely to have renewed discussions once more about spending plans in the U.S. in a couple of months' time. But I think one thing that is crucial from it is that there was a push from the Trump side to remove talk of the debt ceiling, but of course that did remain in the spending bill.
Yeah, I think, at this point, it does kind of feel like we're just kicking the can down the road. Of course, before all of this drama, where Trump and Elon Musk got involved last week, it was kind of felt like a foregone conclusion that that lawmakers would pass a funding bill and then just kind of, deal with this again in March. Obviously there was a lot of, conversation about that. Elon Musk kind of waded into the debate and was talking about wanting a shorter version of the bill. There was a slimmed down version of this, the spending bill that ultimately did get passed. But yes, you still kind of have this sort of tension over what is ultimately going to happen with the debt limit, contrary to historically the Republican position here, at least when it comes to debt, ceiling, leverage and everything. Trump has pretty much indicated that he wants to abolish the debt limit entirely. You can't really do that with a spending bill of this nature. He was, looking for something that was going to ultimately sort of suspend the ceiling for a bit. But I think really the big conclusion here that we can take is that these types of conversations will likely continue well into Trump's term in office, and it looks like we're gearing up for, more debate over what's happening with the budget, with the debt ceiling perhaps in March.
Yeah, and of course, let's not forget Elon Musk sort of lingering in the background there. Our news desk editor, Jill Deeses. Thank you so much for the update. Well, in auto news, Honda and Nissan are aiming to reach a final agreement on their planned merger in June. That's according to NHK. The potential alliance would significantly impact Japan's automobile industry, putting Honda, Nissan and Mitsubishi against Toyota and its partners. Now, speaking with Bloomberg, Carlos Ghosn, the architect of the Renault-Nissan alliance, says merger talks between Nissan and Honda suggest Nissan is in panic mode.
They have cash problem, they have investment problems, they're being really hammered in the United States. They got practically out of Europe. They're being challenged in China. and there is no plan in front of it. So I can tell you that means there is panic mode inside Nissan.
Well, let's bring in Bloomberg's EV supply chain and aviation reporter Danny Lee, who's in Hong Kong. Well, interesting to hear from Carlos Ghosn himself. He obviously is a man who knows a lot about the auto industry, albeit now his life situation has taken a different turn. But he's suggesting that Nissan are coming at this from a position of weakness. What do we know about the contours of the deal and how it happened?
Yeah, I mean, Carlos Ghosn is not mincing his words here, but what we know is the latest is that Honda and Nissan could make an announcement as soon as Monday to kickstart merger talks. And so this has really been culminated in the fact that on Monday morning we saw the fact that Honda, Nissan and Mitsubishi, that's Nissan's junior partner, the presidents of those companies were spotted entering and leaving the Japanese Transport Ministry this morning. And that was kind of a signal that some kind of agreement could happen as soon as Monday, something that could be in the offing. And so this auto mega merger here, that this is a kind of an option that has been the one that has kind of survived over the weekend, something that everyone is coalescing around and something that the Japanese government would support. And critically, it's something where what we've seen in recent days is that something that Nissan will be on the back foot, something that Honda will very much be calling the shots here. Like some of the developments we have heard is that Honda will be the one to pick the president of the enlarged holding company, and that just depends on how this deal gets struck ultimately. And some of the things that we have heard, the timeline, which is also important, by starting the merger talks now and then trying to reach an agreement by the middle of next year and then actually formally getting together by 2026. So things are clearly happening at a pace, and importantly for the Japanese government, there clearly is a keenness because, you know, given how much the auto industry contributes to the economy and to trade, they want to have strong auto players, and particularly in the context of this rising EV challenge from China.
Yeah. And on that last point, Danny, how much is what has happened to Nissan just a reflection of, again, the woes facing the industry as a whole versus a Nissan-specific situation that they have found themselves in? Again, a lot of tumult in the alliance with Renault over the past couple of years. And I just wonder whether this is a Nissan-specific issue in this case.
I mean, the woes of Nissan is a kind of symbolic of the wider challenges the global industry faces, the auto industry faces, right? And but you know, when you look at Nissan specifically, they really have fundamental strategy issues. And you know, no matter how soon this potential merger with Honda gets, and if it is successful, the key thing is how does Honda and Nissan address the strategy issues and the sales issues that are dogging Nissan right now. And clearly that is the pressure that will be facing both sides of management, and you know, how they get together to try and decide how they share resources, finances, who potentially becomes the ultimate key kingmaker in this partnership. Because you know, getting two legacy auto giants to come together is not going to be easy.
Yeah, that's one way to put it. Bloomberg's EV supply chain and aviation reporter Danny Lee, thank you so much. Well, coming up, as the trading year draws to a close, we'll get the outlook for global markets after a year of shocks and surprises. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Asian stocks and U.S. futures are trading higher after the Fed's favored inflation gauge cooled, reigniting rate cut bets. But the overall mood remains cautious as investors look towards Donald Trump's inauguration and the prospect of sweeping global tariffs. Bloomberg MLive currency and rate strategist Ben Ram joins us for more. Let's just unpack the price action towards the end of the week. Fed was a bit of a shock, a hawkish surprise to the market. But then, of course, you had a lower than anticipated PCE number come through on Friday, which has, I guess, allowed investors to re-engage back in rate cutting bets for 2025. The upshot, essentially, is that the Fed are still going to be data dependent.
Absolutely. They're going to be data dependent, and they're not going to be data point dependent, which is the point that I think the markets missed on Friday, because we got a 2.8% print, which, as you mentioned, was lower than estimated. But it's not enough for the Fed, because 2.8% is still too unacceptable for them, 80 basis points higher than what it is, what it should be, rather. And if you look at the sequential prints in the past 3-4 months, it's trended, it's gone in the wrong direction, gone from 2.6, 2.7, 2.8. So that's not an acceptable number for the Fed. So they're going to be very comfortable with those 2 rate cuts that they've penciled in.
Yeah, I mean, the markets so far are actually undershooting that now. There's only 38 basis points priced in. So we had a really severe move towards the end of the last week. U.S. exceptionalism has been a theme for 2024. If you look at stock markets performance, massive U.S. outperformance versus other global markets. The USD is the best performing G10 currency. Can that be repeated in 2025?
I think in the first half, yes. In the second half, not so sure, because I don't know how long the tail of the U.S. economy is going to wag. But, you know, insofar as the Fed is not going to cut rates so much, I think that, you know, there is some kind of traction for the U.S. dollar. And I think that the emerging market currencies will also suffer because of that. And if you look at the Treasury yield, I mean, you're getting a core PC of 280, and if you add a neutral rate of 2%, 1+%, so you're talking about 4% plus yields, and that's what the markets are messaging, which is why we've got 37 basis points of rate cuts, not much more.
Yeah, so your point is that Fed will have to keep rates more restrictive
Absolutely.
to bring inflation back in line. Interesting piece from you and your colleagues about the underperformance of EM this year, both in stock market terms and in local currency terms, and I guess that is also a reflection of the USD, but there's an additional consideration there, that is the threat of tariffs and what that could mean for global trade around the world, with many of these EM countries going to be in the spotlight there. How big of a risk do you think that is into next year?
I think it's a considerable threat, because I think that, you know, maybe perhaps in the second half, because the first half Trump is going to be trying to negotiate something, but maybe after that, if he really imposes tariffs, I think that EMs will feel the pressure of that. Added to that is the fact that China is going to have to probably devalue its currency, or at least guide its currency lower, meaningfully lower. And if they do that, I think all the other emerging market currencies will bear the brunt. Mind you, in this year, the yuan has just gone down by 2.5%, which is nothing at all. Considering the deflation that they are in, they need to seek a weaker currency with much more vigor, and that will tell on emerging market currencies.
Interesting. And just to round up the discussion, the other surprise last week was the Bank of Japan and how dovish they were. That has had an impact on the yen. Where do you think we go from here, and are we close to intervention territory?
No, I don't think we're going to. We're close to intervention territory, because it's the velocity of the move, and I don't think we have seen enough. But having said that, they are dovish, as you pointed out. They are neither here nor there. Ueda keeps talking about deeply negative real interest rates, but on the other hand, he doesn't want to follow through with hikes. So the yen is going to be caught by the real rate differentials working in favor of the dollar, and I think that puts the yen on the back foot. So I think a revisit of 163 levels that we saw earlier this year is eminently on the cards.
Yeah, it seems to be the way. Van, thank you so much for joining us today. A quick around-the-world analysis of some of these key markets. Our currency and rate strategist, Van Ram. Now, coming up, the U.S. lifts a $10 million bounty on Syria's Ahmed Al-Sharaa as the de facto leader calls for lifting sanctions. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. The U.S. has lifted a $10 million bounty on Syria's de facto leader, Ahmed Al-Sharaa, after an American delegation met him in Damascus last week. The U.S. says the move was needed for Washington to be able to engage with the country's interim government. The leader of Hayat Tahrir al-Sham was described as pragmatic during discussions with priorities focused on Syria's economic recovery. So for more on this, Dana Kharish, Bloomberg's UAE bureau chief, joins me now. So this State Department delegation headed to Damascus towards the end of the week last week. What came out of their discussions?
The most important thing is, of course, lifting the bounty, and that's the first U.S. step to establishing some sort of relationship with the new de facto leader, who is no longer now wanted by the U.S. government. So, and gradually we're seeing Hayat Tahrir al-Sham gaining this international legitimacy that they need so much to begin the transition in Syria. And what they also need is lifting sanctions, and that's what they're expecting, and that's what they were discussing with the U.S. officials last week. And the U.S. official who met with Al-Sharaa said that economic recovery is rooted in this transition that Ahmed Al-Sharaa keeps talking about, but that also needs lifting of sanctions. So the U.S. sanctions on Syria almost amount to an embargo on the country, and they were imposed at the onset or a year after the Syrian uprising against Bashar al-Assad. Lifting that would facilitate imports and exports, opening up trade, and it would also help the country curb hyperinflation and curb the currency devaluation, and of course facilitating and allowing in humanitarian assistance that the Syrians need so much right now.
Yeah, but of course, them lifting sanctions is contingent on this new government abiding by certain principles, including respecting the rights of minorities. That's a big feature of the discussions that have been taking place. But it's also worth mentioning, Dana, that it's not just the U.S. that have flown in to have meetings with Ahmed Al-Sharaa. You're seeing European delegations, even a delegation from Saudi Arabia. The Turkish foreign minister was there too. What can we glean from all of the discussions that these representatives from around the world are having with Ahmed Al-Sharaa?
Exactly. The Saudi delegation is also very important, right? He needs to show that he's no longer part of a radical group that could once again not only destabilize Syria, as we had seen years back, but also the entire region. And that's why he keeps repeatedly saying and talking about inclusive governance, talking about protecting minorities, because simply, and like we discussed before, they need cash, they need assistance, and the Arab Gulf funding is going to be very important to rebuilding Syria. And so now he's opening up discussions with even the Saudis. We saw 2 weeks ago the Bahrainis. So this is him, of course, gaining that legitimacy that he much needs. And Turkey, of course, is a major power player now in Syria. And what they want also, they have their own interests as well, and it is to keep the Kurdish forces away from the border, establish a certain buffer zone like, you know, the Israeli buffer zone back in, along the Golan Heights.
Yeah.
And what Turkey, of course, needs is the ultimate, I think, goal is not to have any Kurdish representation. And so it is important to see how Sharaa will deal with the Kurds.
Yeah, and there was talk, at least from the Turkish side, of some of those militias or some of the rebels up in the north actually laying down their arms and offering them to the state. Let's see how that all plays out. Dana Khreish, Bloomberg's UAE Bureau Chief, thank you very much. Well, when we come back, we're going to be talking about India because policymakers are differing on the timing for interest rate cuts as growth remains weak. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks and U.S. futures rebound from last week's sell-off as muted U.S. inflation helps reignite Fed rate cut bets. Panama rejects Donald Trump's threat to reimpose U.S. control over the Panama Canal after the president-elect complains American vessels are charged high fees. Plus, Japanese media say Honda and Nissan are looking to finalize a merger agreement as soon as June. NHK says Honda will pick the president of the holding company with Nissan. Well, it's just gone 8:30 a.m. across the Emirates. I'm Giovanna Versace in Dubai, off for a couple of days last week, but coming back to very exciting markets. But what we did get by the end of last week was a huge pullback for equities, with the S&P pulling back around 3% by the end of the week. The big surprise being that more hawkish than anticipated Fed meeting with them changing the dots to just 2 rate cuts for 2025. The market massively overshot that, now only pricing at around 38 basis points worth of rate cuts. So again, taking the Fed guidance with a pinch of salt. Today, though, we are seeing a bit of a turnaround in sentiment. S&P futures are up 0.4%. The handover from Asia has also been quite positive as well, up 1%. And there, namely on back of the weaker than expected PCE number coming in on Friday, giving a boost to some of these markets. And once again, allowing investors to focus on the rate cutting cycle next year. The Asia dollar index today not doing a whole lot, albeit we're coming from the lowest level it's been in the last 2 years. Particular focus on the yen as well after the dovish Bank of Japan meeting next week. That continues to put upward pressure on dollar yen, as we were just speaking about in the prior segment. And then nat gas in focus today. And here you can see we are 4% higher. Speaking to our colleague Steven Sachinsky out in Asia, and he's going to be on the show later, he was telling me that some of this is on expectation of some of the warmer weather in the U.S. receding in the coming weeks, and also an increase in U.S. exports. So keep an eye out for nat gas futures as well as we head into the next few weeks. As for our terminal charts, this is something interesting I wanted to flag. We've been talking about the outperformance of U.S. stock markets, but take a look at how the evolution of the AI trade has transpired throughout the course of this year, because it wasn't all NVIDIA, contrary to perhaps everything that I've said over the last couple of months. We started off with the server maker SMCI leading the charge. Then it was NVIDIA. And now, actually, the big outperformance has come from an energy company, Vistra. Why is that the case? Because, of course, AI consumes energy, and some of the energy companies that power these data centers are doing really well. And in this case, it's an energy company called Vistra. So it hasn't all just been NVIDIA. It's been the AI ecosystem as a whole. I thought that was an interesting chart that I wanted to flag. Now, let's turn to India, where growth remains weak and volatile food prices are keeping inflation high. That's led to differing views amongst India's policymakers on the timing for interest rate cuts. The Reserve Bank of India's rate-setting panel kept the benchmark repurchase rate unchanged at 6.5% earlier this month, with 2 of the 6 members voting for a quarter-point cut. There's so much to talk about here about India, the outlook for the economy, and the central banks. So let's bring in the expert, Achala Jethmalani, economist at RBL Bank in Mumbai. Great to have you with us on the show. Maybe let's just start with some of the challenges ahead for Modi as we get into 2025, because the first 6 months of 2024 was perhaps more smooth sailing. Then the elections happened. He was forced into a coalition that perhaps he wasn't expected to be in. Later on in the year, we also saw the re-election of Donald Trump, which raises all questions about tariffs, protectionism. It looks as though 2025 could be a challenging year for Mr. Modi.
Hi, good morning. Thank you for having me on the show. Yes, it is going to be a challenging year. 2024 was a year when countries braced for election. The year 2025 will bring a lot of uncertainties. Back home, as you mentioned, yes, now we are in a coalition government, but when it comes to policy making, I think the choices are pretty clear as to what the government would have to focus on. Of late, we've seen that there is a lot of concern around job-led growth. So the first importance would be given to the aspects of employment creation. The question is, how would the government would want to go about it? The 2 factors that we are focusing on is scaling and skilling. Whether we talk about investments or FDI inflows in manufacturing and services segment, so as to ensure that there is more employment and job creation. And second is, of course, how do we attract and invite foreign companies to establish their base out of India at a time when the world is looking at China +1. This would be the right time to capitalize on this opportunity of diversification away from China.
Yeah, so with the rest of the world paying increasing amount of attention on public finances and the state of countries' public finances, it's interesting that the Indian deficit is also close to 5% as well. Is that going to pose, do you think, somewhat of an issue as you think about the coming years and the medium-term fiscal outlook for India?
So there are a tale of 2 stories when we talk about India's fiscal scenario. One is at the central level and the other is at the state level. So when we talk about center's fiscal deficit, as you said, we are at 4.9% of budget estimate for FY25. FY26, we are expecting it to be at 4.5% and gradually move closer to the 4% target by FY27. And the fiscal consolidation roadmap is something that we are expecting to continue by the current government with the right amount of revenue and capital expenditure mix. What we will be watching out for in the next couple of years is how do the state finances look? At this point in time, there are certain states that are running a deficit of slightly above 3% or closer to 3% on a year as a percent of their GDP. So that's why I think center plus state fiscal finances is something that will have to be focused on. But overall, when we talk about the central fiscal scenario, the situation is more or less sanguine.
Let's talk about the outlook for the RBI. Some people thought that they would actually begin the rate cutting cycle, but they haven't. There's a new governor at the helm. Al-Sharaa took over last week. What is in store, do you think, from the central bank as we head into 2025, and how will that change under a new governor?
There is a lot of speculation around his thought process because when it comes to monetary policy, there's not much out there in terms of his views and thoughts. So as we enter 2025, there will be a lot of uncertainties that the new governor would have to navigate. And as of now, it is not just the new governor. There will be a new deputy governor with a fairly new 6-member monetary policy committee, of which will decide on policy rates, so to speak. So in terms of what the new governor would really do will be known only in February 2025. And outside of policy rates and monetary policy making, market participants are also anticipating how would he review and look at the regulatory aspects as well. But as of now, it is clear that the RBI MPC will be more data-driven. There is a lot of uncertainty around us. Earlier, it was just about inflation, which has largely been food-led. But now the challenge is a little more steep because of a slower growth, a weaker growth, so to speak, and also the new headwinds that we are seeing in the currency market play out because of a relatively, because of a firmer dollar.
Yeah, well, this is exactly what I was going to ask you about because we have seen some weakness in the rupee. And I wonder to what extent the RBI are going to be keeping a close eye on what the Fed decide to do next year, especially with the Fed sort of dialing back some of their dovishness at the meeting last week. Is that going to have a knock-on effect?
I think it will be more domestic data-driven, but of course we cannot be entirely decoupled with what the U.S. Fed does. You're right. And as I mentioned, the challenge has only steepened a bit more. In economics, we talk about the impossible trinity, and I think that is what India would face when we are talking about inflation growth dynamics and currency outlook suddenly changing to not its benefit. So, of course, it is going to be a challenging policy mix that the RBI and the MPC would have to go in with. But having said that, at the December monetary policy meet, the RBI did reduce the cash reserve requirement ratio about 50 basis points. That infuses liquidity into the system. So for 2025, as we head into it, there will still be a lot of comfort going forward. The policy is not as restrictive as it was. With regards to the first policy rate cut, of course, the timing has only gotten a bit more challenging. The expectation was that we could possibly see the first cut happen as early as February 2025, but the chances are slightly split now in order to go for a rate cut, say, right away as we make the first policy, which is February.
Interesting. Thank you for your insight. Achala Jethmalani, economist at RBL Bank in Mumbai. Now on to the auto space now. Carlos Ghosn, the architect of the Renault-Nissan alliance, says merger talks between Nissan and Honda suggest Nissan is in panic mode. He told Bloomberg that while there are similarities between the firms, cooperation between the two firms will still be challenging.
It's a desperate move. It's not a pragmatic deal because, frankly, the synergies between the two companies are difficult to find. There is practically no complementarity between the two companies. They are on the same markets, they have the same products, the brands are very, very similar. So in a certain way, from one side, Nissan, it's a desperate move to try to find the future. And from the other side, Honda, which, if I understand well, they were not very excited about this move. But, you know, you have to count with Métis in Japan. That means the Métis had a big say into it. So at the end of the day, they're trying to figure out something that could marry the short-term problems of Nissan and the long-term vision of Honda.
Do you think Nissan is being do you think Honda is being pushed into this deal by the economy ministry? There's politics pushing this deal, Carlos, rather than the value of the deal?
Without any doubt for me. That means having lived in Japan for so many years, I understand how influent can the Métis be. And I can tell you that from all the data that I received about the performance of Nissan, which has been miserable for the last, at least for the last 2 to 3 years, they have cash problem, they have investment problems, they're being really hammered in the United States, they got practically out of Europe, they're being challenged in China, and there is no plan in front of it. So I can tell you that there is panic mode inside Nissan.
You've dealt with the Japanese, you've dealt with Nissan, you understand the metrics to get these organizations together. Is the government going to have to deliver backstops to Honda to make this deal work?
No, I think they in a certain way tried to push Honda onto this deal. Obviously, Honda must have some kind of benefit out of it, if not on the short term, at least on the mid and the long term. But that will be closely monitored to make sure that the impact on the Japanese society is not going to be too big. Because, you know, when you have two companies of this size and practically in the same market with practically the same strengths and the same weaknesses, there are going to be a lot of costs to be taken out, and there are going to be a lot of duplication to be taken out. So this is going to be closely monitored by the Met.
It's driven by the Ministry of Economy. So there's a political dynamic to this. Is this Japan creating, putting two companies together to really try and stand up to the competition from China? Is that part of the narrative here, Carlos?
Without any doubt. It makes a lot of logic. Today, the Chinese automakers are on the winning side. They became, as you know, the largest exporter of cars. They are the largest maker of EV. They are being successful in a lot of new technology. They're doing fine cars. So in a certain way, yes, it's a defensive mood. It's a defensive mode that's going to be trying to shore up the Japanese industry and avoiding a cataclysm, first a social cataclysm in Japan, and particularly to try to reinforce these companies on the foreign markets.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. Mozambique is bracing for more protests as the country's top constitutional body prepares to validate its disputed election. The Southeast African nation has been rocked by an unprecedented wave of violence since October's vote, leading to at least 130 deaths. For more, let's bring in Bloomberg's Odiro Ganga. And Odiro, if the Constitutional Council do actually validate the election results, how is that likely to be taken by the public, who, of course, have been demonstrating for the last couple of months now?
Jumana, we've been hearing speculation from local media that actually they're expecting the Constitutional Court to validate these results that saw the ruling party win by a majority. We had their candidate, Daniel Chapo, win the presidential vote by 70%. And then opposition leader, Venancio Mondlane, only win 20% of the vote and only getting 31 of the 250 parliamentary seats. He did not like these results. He contested in the Constitutional Council, citing election fraud. And leading up to these results, like you asked, tension has been rising in the country. You had Mondlane through Facebook Live saying that the Constitutional Council's decision will either lead Mozambique back to peace or plunge the country into chaos. He's announced the next phase of the protest, which is calling Turbo V8, and this is expected to continue putting social, political, and economic pressure on this government. As this tension continues to rise, we're also seeing civil society calling for truce and negotiations between both sides, but the incoming president, Daniel Chapo, is yet to be sworn in. So he has no constitutional mandate to negotiate or cut a deal with Mondlane. And on the other hand, the outgoing president, Filipe Nyusi, has completely and successfully completed his 2 presidential terms. Hence, he has no incentive to cut a deal and negotiate. He had a 1-hour call with Mondlane, but Mondlane maintains that the basis for any conversation is for electoral truth to be revealed, which is a non-starter for any conversation.
Yeah, and of course, while all these demonstrations were taking place, the country has sort of come to a standstill. I've seen many analysts downgrade their forecasts for Mozambique growth for next year. How likely is it that we see a turnaround in the coming months, or is the outlook still pretty dim based on the political backdrop that we've seen in the last couple of months?
Jumana, we are not likely to see a turnaround in this quarter or the next quarter because several sectors are taking a hit. Take tourism, for example. This is supposed to be their biggest season. They're expecting tourists to be coming in, flocking the Mozambican beaches, enjoying their Christmas, but hotels are operating under capacity with little to no confirmations. So lodges, hotels, and adjacent industries that depend on tourism are likely to take a hit. You also look at their $20 billion natural gas project with Total. It's likely to face further delays. And this is a project that was expected to increase the country's foreign exchange earning, create employment, and grow the economy. Now, delays put at risk Mozambique's debt servicing. And the president has also come out and says civil servants' salaries are likely to delay due to a drop in revenue collection. You're also having the Business Association Council saying that losses will amount to about $400 million. And Standard Bank, like you mentioned in your question, they've downgraded their outlook and forecast to about 2.5% from last year's growth focus of 5%. And they're saying they're expecting a contraction in the fourth quarter and the first quarter of 2025. And 2 consecutive contractions means that Mozambique will be heading into a technical recession. So turning things around, not likely in the near future until they reach a middle ground, have a conversation, and start turning the economy around.
Yeah, Bloomberg's Ondiro Ganga, thank you so much for the reporting. Now, coming up, trade concerns and fears over the Fed's policy path saw European stocks suffer major declines last week. We'll discuss what's driving the losses and the outlook for 2025 next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, let's turn to Europe now, where stocks got pummeled last week amid fears about Fed's policy path, the outlook on tariffs, and concerns about the region's biggest companies, including Novo Nordisk. Now, for more on what's driving the losses and investor expectations for next year, Farah Al-Bahrawi, who leads our EMEA equities coverage, joins us now. Farah, let's just talk more about the big underperformance of Europe this year versus the U.S. And I could ask you whether it's economics, whether it's politics, with the various political stories that have been bubbling up in France and Germany. But then perhaps the major culprit is that Europe just doesn't have as big an AI industry as the U.S. does.
That's really the grand picture, Jumana. You have Europe under the U.S. quite sharply this year due to many various factors. So you have the political instability. We've had elections in the UK and in France this year. We have one upcoming in Germany. And the issues in France continue to still be unresolved. You don't have an industry the same way the US does in terms of tech. So you don't really have leadership in the European stock market. In fact, we saw Novo Nordisk, which has actually helped lead the rally quite a bit in Europe over the past year or so, slump at some point by the most on record after its drug didn't help patients lose as much weight as it has expected to, and it actually gave a boost to its U.S. counterpart Eli Lilly. So it just goes to show that Europe continues to have all of these things that just make it underperform constantly versus the US. You have Donald Trump coming in next year, being inaugurated on Jan 20. He's promised tariffs on Europe. We just heard from that late last week as well. So the tariff picture has also made investors more sour on the region. And overall, the question is, with the U.S. continuing to have such strong leadership, does Europe really have a chance? At this point, investors are not very optimistic for next year, at least the same way as they are.
Yeah, I mean, we just put up a chart of the stock 600 versus the S&P. The stock 600 only up about 5%, but the DAX, I thought this was interesting, is up more than 20% this year, despite, again, all of the manufacturing issues that we talk about in Germany, the various political issues as well. Why is it the case that the DAX index has managed to do so well, despite the obvious?
Well, Jumana, actually, it's back to that tech element that we were discussing. SAP has helped really lead the rally on the DAX, and it wouldn't be as up as much this year. But still, if you look at Germany and the makeup of its benchmark, it actually derives most of its earnings from outside of Germany. So certainly we are seeing a slowdown in Europe's biggest economy, and they do have elections upcoming. But unlike France, where the election uncertainty is really weighing on the region, there's optimism that after the February elections in Germany are done, we can see some increased government spending, and we've seen stimulus coming through from China, which could be another big boost for the DAX and the German index if the Chinese consumer comes back strong. So the outlook for Germany continues to be a bit more positive than the rest of Europe, at least for the DAX.
Yeah, and I can't remember the exact number, but I remember reading somewhere that only about 20 to 30% of the DAX is actually derived from domestic markets. The rest is international markets. So again, we'll be receptive to some of these global developments as well. Farah Al-Bahrawi, thank you so much for joining our show today, leading our EMEA equity coverage. Okay, a quick look at equity futures before we head into the second hour of the show. Things are leaning towards the green. A better handover from Asia overnight. S&P, NASDAQ, all of the three U.S. majors are leaning towards the green as well. Euro Stoxx futures down about a tenth. That's it for the first hour of Horizons Middle East and Africa. I'll be back in a moment for the second hour. I'm Jumana Bersachi in Dubai. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks and U.S. futures rebound from last week's sell-off as muted U.S. inflation helps reignite Fed rate cut bets. Panama rejects Donald Trump's threat to reimpose U.S. control over the Panama Canal after the president-elect complained American vessels are charged high fees. Plus, Japanese media say Honda and Nissan are looking to finalize a merger agreement as soon as June. NHK says Honda will pick the president of the holding company with Nissan. Well, good morning again. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Welcome to the second hour of Horizons Middle East and Africa. And just getting you up to speed on how some of these markets are faring, because we are seeing some green on the board today, despite the pullback in global equities last week. The S&P ending 3% lower for the week. European equities also down about 3% as well, on back of that much more hawkish than anticipated Fed meeting that led to the sort of repricing of various assets in the U.S., a strengthening of the USD, and a pricing out of some of the rate cuts of 2025. But Friday, we had a lower than anticipated PCE print, which, as we know, is the Fed's preferred inflation gauge. So on the back of that, we are seeing a bit of life come back to these stock markets again. So the handover this morning is pretty positive. S&P futures leaning towards the green, up 0.5%. Euro Stoxx futures not enjoying that same momentum, but basically trading around flattish as we head into the European session. The USD unchanged overnight, but this is coming on the heels of a 1% gain throughout the course of the week last week. And then 10-year yield sitting at 4.5%. We did move about 12 basis points higher throughout the course of last week, again, on back of that hawkish Fed and the market pricing out their expectations of not just the rate-cutting cycle, but also where the neutral rate is going to end up, or the terminal rate is going to end up in this cutting cycle as a whole. So 4.5% is where we are for 10-year yields right now. As for our terminal chart today, this one is interesting because we're heading towards the end of the year, and the U.S. stock markets have massively outperformed other markets around the world. And take a look at this. The S&P 500's outperformance for this year is the largest outperformance versus the rest of the world since 1996. So that is what those green bars are showing you. And of course, a lot of that is on back of the excitement and exuberance around the AI, but then it can also be pointed back to the strength of the U.S. economy, which has defied expectations of a soft landing and a recession over the last 12 months as well. So just park that thought there because it is an interesting one. Now back to political news. Panama's president has rejected Donald Trump's threat to reimpose U.S. control over the Panama Canal. The president-elect claims the waterway has fallen into the wrong hands and that U.S. vessels are being charged exorbitant fees.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
So Panama today, I was expecting to walk into the show and talk about the Fed and PCE, but no, we're talking about Panama. Our news desk editor, Jill Deeses, joins us now. Jill, talk us through what President-elect Trump's grievances are vis-a-vis the Panama Canal.
Quite a curveball over the weekend here, Jumana. So ultimately, it seems like what Trump's issues here kind of boil down to a couple of different points. First of all, he's talking about what he calls very unfair prices to actually travel through the Panama Canal. The U.S. is the canal's largest customer, accounting for really about 2/3 of traffic that's kind of running through there. But another part of this does seem to be geopolitical. So China, another big customer for the Panama Canal, has, Trump's kind of inferring here that ultimately, like, they're gaining a lot more influence over the Panama Canal than they should. There is a little bit of a historical context too here. China has obviously over the past many years been trying to increase its influence within Central and South America. You saw several years ago in 2017, Panama actually severed diplomatic ties with Taiwan over the China issue. So there's some issues there that are kind of cropping up into the conversation here. And then the other piece of this is that while it's true that it is the government that does have full authority over the canal itself, there are also a handful of ports that are all surrounding the canal. There's some subsidiaries of a Hong Kong company that do control a couple of those ports, and so it could be that that's something that Trump is upset about if you just kind of sit there and connect the dots a little bit. And then obviously, as we've really seen, Trump kind of handle with a lot of other countries is this idea of this more protectionist mindset that he's kind of coming into. Trump has really made a cornerstone of not just his first administration, but then also this incoming one, his presidential campaign, this idea that a lot of the world is being very unfair to the U.S. in terms of what it charges, whether that be for something like this, such as canal services, military defenses, all that kind of stuff. And so that all just kind of seems bundled into this theme that we've really seen Trump kind of hammer on as a pretty central component of his campaign, and then ultimately, likely to be a big factor once he actually re-enters the White House in January.
Jill, let's turn to the matter of the U.S. spending bill that was agreed to on Friday. And usually these tend to be contested. It's always the way as you get closer and closer to the debt ceiling that you end up with these sort of 11th hour agreements. But this one perhaps more controversial than usual simply because Elon Musk was weighing in so much on his X platform. Tell us about what exactly was agreed to and why over the weekend President-elect Trump had to suggest that he actually was and will be the acting president and Elon Musk won't have a chance at that.
Well, I think, Jumana, there's a couple of factors here at play. So just to kind of, rewind a little bit, at the beginning of last week, when we had these spending bill conversations, it wasn't actually thought of that would be, some kind of a big dramatic 11th hour finish this time around. There was, sort of a widespread expectation that there was an existing spending bill that had bipartisan support. Obviously, it doesn't fix the issue forever. Just kind of, punted, kicked the can down to March. But there was, sort of an understanding that maybe that would pass with very little drama. Obviously, all that changed when Trump and Elon Musk kind of entered the conversation at the end of last week, sort of made these demands for sort of a stripped-down spending bill. There was a version of that ultimately passed that still included, some big provisions, such as $100 billion worth of disaster relief aid that was primarily for a lot of those, areas in the southeastern United States that were hit really, really hard by hurricanes last year. But then, or earlier this year, really. But then, you bring into that also, like, the sort of conversation around debt limits and such that Donald Trump has been involved in. I think, even so, Elon Musk really did enter that conversation as a pretty key driver of, wanting to get the stripped-down spending bill in place. He's obviously, as is Trump, sort of this very big personality when it comes to a lot of these things, and does have something of a role in the Trump administration. It's interesting, though, to see, Trump come out and, have to reassert that he is still the president. And I think, kind of both very interestingly for what we may expect when Trump does re-enter the White House and how that relationship with Elon Musk may change.
Yeah, let's see how the evolution of that friendship slash alliance goes in the coming years. Our news desk editor, Jill Deeses, thank you very much. Well, Japan's public broadcaster is reporting that Honda and Nissan are aiming to reach a final agreement on their planned merger by June. The potential alliance would significantly impact Japan's automobile industry, pitting Honda, Nissan and Mitsubishi against Toyota and its partners. Speaking to Bloomberg, Carlos Ghosn, the architect of the Renault-Nissan alliance, says merger talks between Nissan and Honda suggest Nissan is in panic mode. Let's bring in Bloomberg's EV supply chain and aviation reporter Danny Lee, who's in Hong Kong. So Carlos Ghosn, who, of course, was key to bringing these two massive auto companies together, Renault and Nissan, is saying the fact that Nissan is even considering a merger with Honda tells you everything you need to know about the state of Nissan itself and the state of the auto industry going on the defensive. There have been a lot of talks about this potential merger. What do we know about the likelihood of it actually happening, Danny?
Yeah, I mean, we could actually get an announcement as soon as Monday afternoon in Tokyo of an agreement between Honda and Nissan to start formally merger talks. And this has really culminated in the fact that the presidents of Nissan and Honda and Nissan's junior partner Mitsubishi were spotted going into the Japan Transport Ministry earlier this morning in Japan. And so that was kind of a key signal that maybe these pair have actually come to some kind of agreement, and they wanted to tell the Japanese government how things will play out. And so, this potential auto mega merger here, the entry of Honda to come and save potentially Nissan, is pretty much the only deal left on the table at the moment that is one that the Japanese government actually supports here. And so by having Honda play a key role, this is something where Honda ultimately seems to be calling a lot of the shots here. Now, we've had a couple of news lines already today that gives a key indication of that. For example, the fact that Honda would likely choose and pick the president of the enlarged holding company that could have Honda and Nissan together. And we could also see then the fact that this timeline, they start the merger talks now, then they have an agreement in place by the middle of next year, and then they would be able to combine by 2026. So the urgency and pace of which they are trying to come together is quite telling here. And then also on top of that, the fact that the Japanese government really is keen to have these sides come together, because ultimately for jobs which are at stake, for the economy and for trade, the fact that Japan wants to have these strong auto companies relative to the context of how the dynamics of the auto industry has shifted towards the Chinese and the EV sector at large.
Yeah. Danny? Thank you so much. A really important story in auto space and could create yet another Japanese juggernaut. Bloomberg's EV supply chain and aviation reporter, Danny Lee. Now, as the trading year draws to a close, we'll get the outlook for global markets after a year of shocks and surprises. Peter Schaffrik from RBC Capital Markets joins us next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Asian stocks and U.S. futures are trading higher after the Fed's favored inflation gauge cooled, reigniting rate cut bets. But the overall mood remains cautious as investors look ahead to Donald Trump's inauguration and the prospect of sweeping global tariffs. Joining us is Peter Schaffrik, global macro strategist at RBC Capital Markets. Well, just looking back at this year at how stock markets have performed, you have the S&P up around 30%. Even the DAX in Germany, despite everything, is also up more than 20% as well. You wouldn't think that there had been so many discussions about the state of their respective economies. How do you see the outlook going into 2025? In your research note, you talk about there being more headwinds than tailwinds into next year.
Yeah, certainly. So, one of the things, and I guess that's what the equity market shows as well, is the U.S. still does tower over pretty much everyone else around there. And I think that's also the theme when we speak to investors, that the U.S. has an exceptionally strong economy, and going into next year is unlikely going to change. Now, the situation in Europe is very different. You mentioned it a couple of times now. Europe has many, many headwinds. And one of the headwinds that we think is going to be underrated at the moment is that the central banks are probably not able to cut interest rates as much as some people would like to hope. And of course, that comes on back of some of the other issues that we have in terms of lack of growth, lack of productivity growth, and so on and so on.
Does that mean a recession could be on the cards? It's something that we've been talking about for many years now. It doesn't seem to have happened, despite the fact that so far the easing cycle has been very, very shallow indeed. But given what you've just highlighted, could that be a scenario to envisage for perhaps not the world's largest economy or the second largest economy, the US or China, but some of those European countries that you also cover as well?
Well, the interesting thing is that we think that's very unlikely. And the reason is we still have a situation where the labor market is firm. Most people have a job. It doesn't, even though it's cooling a little, it doesn't look likely that we're getting mass layoffs outside of a few sectors maybe. And that's typically one of the indicators that you would look for whether you get a recession or not. And in fact, there's some indication even that over here in Europe, private domestic demand has started to pick up, which was one of the missing pieces. But the problem is it's just not strong enough. It's nowhere near where the US is. And if I go back to what I said earlier, when you look at some of the details of where growth is coming from, what the US has, they have very strong productivity growth, meaning they get better with the same amount of resources. And some of that is probably due, we heard it in an earlier part of your show, of the key sectors that the US is servicing, which Europe does not, the UK does not. And I think that's one of the key problems, really. But a recession is unlikely, we think.
Yeah. What do you make of the Fed's tone last week? Is it a recognition of sorts that there may be upside risk to inflation once more?
We certainly do think so. In fact, we at RBC had a call for a long time now that probably 4 to 4.25 is where the Fed will end up in this part of the easing cycle before they will go on a protective pause. And the question really, what is coming thereafter? And whilst we don't see that actually playing out, we think it's quite plausible that in the market, a story will develop that the next step after that is actually up. And some of the main reasons are the strength of the economy, the strength of the labor market, the tightening of the labor market that we probably will get through some of the Trump policies, and indeed some upside risk to inflation, not only from the strength of the economy itself, but probably also from some of the policies that we will be getting. And some of the Fed members have started to factor that into their own forecasts already.
Yeah, does that also apply to Europe as well? And I'm bringing this up. Some headlines are coming through. Christine Lagarde gave a podcast interview to the FT, and she said in that interview that they are getting very close to meeting the 2% inflation goal. If that is the case, does that set the stage for a more dovish ECB than the Fed?
Well, more dovish than the Fed, for sure. I think we're here already, because when you listen, you just quoted Lagarde, but when you listen to some of the other ECB members, there's a few very, very dovish members out there. However, and I think that's really sort of where we at RBC differentiate ourselves maybe from how we see things. We also think that in Europe, the intrinsic inflation pressures will not easily go away. We still see, both in the UK as well as in the euro area, we see that the domestically generated part of the inflation basket, service inflation in particular, is not really coming down as strongly as the central banks would like. And we do reckon that, particularly for the ECB, once you get to about 250, a very real fight within the ECB will probably break out what the right policy is and where the neutral rate is and where they can land within the neutral zone.
Yeah, it's interesting, actually, just looking at what is implied by the curve. For all of the calendar year in 2025, the U.S. is pricing in only around 38 basis points. In Europe, just to October of next year, there's more than 100 basis points of cuts priced in. So again, it's a matter of sort of micromanaging there. What do you think all of that does to the euro then?
Well, I mean, most people we speak to are bearish euro, or rather bullish on the dollar in one form or another. And we are no exception. The question is just about magnitude. I know there's some people out there who call for parity and beyond. We are not one of them. We do think that we'll probably get to 1 or 2. Maybe we do briefly touch parity, but overall, we think the market has probably done quite a lot of the heavy lifting already. And as I said, positioning is already very strongly in that direction. But clearly, it's at least going into the year, it's very difficult to see a positive euro story here.
Yeah. Well, Peter, I'm going to leave it there. Thank you so much for getting up at even earlier than 5 in the morning to speak to us from London, especially on December the 23rd. We're appreciative. Peter Schaffrik, Global Macro Strategist at RBC Capital Markets. Well, coming up, the U.S. lifts a $10 million bounty on Syria's Ahmed Al-Sharaa as the de facto leader calls for lifting sanctions. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Well, the U.S. has lifted a $10 million bounty on Syria's de facto leader, Ahmed Al-Sharaa, after an American delegation met him in Damascus last week. The U.S. says the move was needed for Washington to be able to engage with the country's interim government. The leader of Hayat Tahrir al-Sham was described as pragmatic during discussions, with priorities focused on Syria's economic recovery. So for more on this, Honor Ant, Bloomberg's managing editor for the Middle East and North Africa, joins me right now. The U.S. State Department sending that delegation to Damascus towards the end of the week last week. Its first visit, of course, since the civil war. What came out of that meeting, Honor?
Well, that meeting, the gist of the meeting was primarily about basically giving indications, public indications to both the Syrian government and the outside world that the U.S., in line with what G7, Group of 7 nations have already said, is ready to work with the new Syrian government, the interim government, and the HTS led by Ahmed Al-Sharaa, as you said, Jumana. And the lifting of that bounty, $10 million bounty on Al-Sharaa himself, is the first sign that, things are coming into place, and the rest of the international community, both global and regional powers, are ready to work with Syria's interim government, although the HTS is still designated as a terrorist organization by many of them, including the U.S. And the U.S. delegation in particular were there, basically one first assess the general policy outlook of the Syrian government. There are things that the U.S. government is especially concerned or concerned about or eager to know more about, which is protection of freedoms, human rights, and in general protection of non-Muslim minorities, communities in Syria. And that's what they were there to assess.
Yeah. Honor, the Turkish foreign minister also had a meeting with Ahmed Al-Sharaa where they talked about all weapons in the country coming under the control of the state. Why is that significant?
Well, that was a very packed statement by Ahmed Al-Sharaa, basically bringing all the weapons in Syria under the government control. We need to break it down. Basically, one of the main things that those two discussed, Ahmed Al-Sharaa and Turkish Foreign Minister Hakan Fidan, was the fact that they want to see the US-backed Syrian Kurdish rebel groups, YPG or PYD, whatever you want to call them, to be dismantled, basically lay down their arms, because that's a major security issue for Turkey, which has been very influential in remaking of the whole political landscape in New Syria after Assad was installed. And secondly, and maybe more subtly, it's also about Israel. Israel has also a wide range of security concerns about the future of Syria. They're afraid that the political vacuum that can result in some groups trying to pick up arms or use the arms inherited from the Assad administration, basically use them for attacks against Israel, which Israel does not want to see happening. So Ahmed Al-Shara's comments should be broken down into those bits.
Yeah, interesting context there. Honor, thank you so much. Honor at Bloomberg's managing editor for the Middle East and North Africa. This is a look at equity futures before we head to the break. A bit of green on the boards. The handover from Asia has been better. But coming up, we're going to be talking more about Donald Trump's trade threats and diplomatic efforts, which are causing turmoil globally. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks and U.S. futures rebound from last week's sell-off as muted U.S. inflation helps reignite Fed rate cut bets. Panama rejects Donald Trump's threat to reimpose U.S. control over the Panama Canal after the president-elect complains American vessels are charged high fees. Plus, Japanese media say Honda and Nissan are looking to finalize a merger agreement as soon as June. NHK says Honda will pick the president of the holding company with Nissan. Well, it has just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Welcome to the second hour of Horizons Middle East and Africa. A look at markets. We were just talking about the more positive handover from Asia overnight. From Asia Pacific, you can see the index is up 1.3%. So a bit of a rebound after the pullback that we had last week, but not as big a pullback as we had for U.S. equities, which were down 3% by the end of the week last week. The catalyst being that more hawkish than expected Fed meeting. The market started to dial back their expectations for rate cuts next year. We've been talking about the fact that there's only about 38 basis points of rate cuts priced in for 2025. But today, S&P futures leaning towards the green, up 0.5%. The Bloomberg Asia Dollar Index, the reason I'm talking about this one is last week we saw a big climb for the USD, up 1%, but that also meant that many EM currencies, including some of those Asian currencies, have been trading on the back foot versus the USD. That index is actually trading in a 2-year low. So the Bloomberg Asia Index is at a 2-year low, particular focus on dollar yen after that dovish Bank of Japan meeting last week as well. And then nat gas in focus today, up 4.3%. So we'll talk more about some of the dynamics of what's going on there. But again, some of this is in anticipation of some of the warmer weather in the U.S. receding and on a surge in U.S. exports for LNG. So we'll talk about that in a moment as well. Before we do move on, though, I just want to draw your attention to one chart which I thought was interesting, because for most of this year, we've been talking about the AI-led performance in U.S. stock markets, but it hasn't all been NVIDIA. Take a look at this chart. It tells you that over the course of this year, there have been various leaders. So at the beginning of the year, it was actually server maker SMCI that was leading the charge. Then it was NVIDIA, and now it's actually an energy company called Vistra that has been leading the performance. Why? Because as we know, data centers consume a lot of energy, and so there are many utility companies that are looking to benefit from the hype around AI, and that is this company in specific, Vistra, which has done extremely well over the course of the last couple of months. So the flavors of the AI trade have changed and evolved throughout the course of this year. Interesting chart there. Right. U.S. President-elect Donald Trump has warned the European Union that its exports will get hit with U.S. tariffs if its member states don't buy more American oil and gas. The EU is already a major buyer of U.S. liquefied natural gas, LNG, and has discussed purchasing more to deter tariffs. So for more on this, Bloomberg's Stephen Chasinski joins me now. Really interesting angle on this one. President-elect Donald Trump has been busy over the last couple of days, Panama, Europe, tariffs. But in this case, the U.S. actually does have a more than $100 billion deficit with Europe, but namely on back of the number of autos and cars that are sold into the U.S. They have already been buying plenty of energy products from the U.S. over the course of the last few years, but the U.S. wants more. How feasible is that?
It's challenging. Both oil and gas, to expand the exports to Europe would be difficult. The reason for that is a lot of the LNG, liquefied natural gas, and the oil that's traded in the market today, the destinations are really dictated by the market. They go to the highest bidder. And so if you saw LNG exports from the United States in 2022, right after Russia invaded Ukraine, prices of European gas surged because there was a risk that they were going to have a shortage without the Russian pipeline gas continuing. So a lot of American LNG rerouted to Europe. But now a lot of that LNG is rerouting back to Asia because prices have sort of calmed down and it's not as competitive, it's not as attractive to send all of it or most of it again to Europe. Now, Europe is already a major importer of American LNG, so shifting it significantly to take up and reduce the deficit would be challenging. Now, if you look longer term, there are a number of liquefied natural gas export projects that are being considered. They're proposed, and potentially European buyers could sign long-term contracts with those facilities to help kind of boost them and get those built later this decade. And I'm talking 2027, 2028, 2029 onward. So that's sort of a long-term solution. It wouldn't reduce the deficit tomorrow. That might not make Trump happy, but that's how the mechanics of it work. So Trump has a request, but there's little that Europe can do to immediately buy more American oil and gas without basically the markets working in tandem.
What about the outlook for gas production in the U.S., irrespective of Europe? I was speaking to an energy specialist a week ago, and he was saying that where we might see a big bump up in production in the U.S. is less so in oil, because so many of these shale drillers are so focused on cost discipline and returns to shareholders, but more so in the gas department, because there is one, potential to keep growing there, and two, you're going to get some more permits approved. So how likely is it that we're going to see a big ramp up in that space?
Yeah, I mean, I think natural gas is the area for growth in the United States. There's a lot of supply that can come online. And what's different than oil and what's quite interesting is, okay, so the U.S. is already the world's biggest exporter of liquefied natural gas. They became the biggest exporter last year. That export capacity is actually set to double by 2030. And that's not counting the Biden pause or removing that pause. That was already on the books. Those facilities had their permits and they're already getting built, and they're going to increase the U.S. LNG exports to double, cementing the country as the world's biggest exporter. To produce LNG, you need gas. And so for shale drillers, it makes a lot of sense. Produce more gas, there is just a natural increase in demand from foreign markets. It makes sense. And they're going to need more gas to fill up those facilities. So yes, that does propose a really attractive scenario for those drillers. Now, looking at the potential Trump administration, Trump already said day one he's going to remove what Biden enacted, which was a ban on new permits. The Biden administration was worried that beyond this doubling of LNG export capacity, if they increased more capacity, could that increase the price of domestic gas for consumers at home? What's the environmental impact? So they put a ban last January on new permits. Now, the Trump administration said they're going to remove that day one, and so that paves the way for potentially more projects. But for an LNG project to move forward, it takes billions of dollars of investment and the backing of buyers. So that means that buyers have to commit to a project before it gets approved, before the banks come in and finance it, and before it begins construction. So that's where Europe could come into play when I mentioned before about the long-term contracts. If they sign long-term contracts with proposed LNG export facilities, they get their permits, they get built, then LNG exports expand even more, maybe into the 2030s and later. But the challenging thing about all of this is Europe also has really ambitious green goals. So how much more LNG can they take? Because they do want to transition to renewables and cleaner sources. And can they commit to LNG from the United States for decades into the future?
Yeah. Well, you could also argue that with all of the political discourse that's going back in Europe right now, some of the green agenda may have to be diluted. Final question for you, and this is to do with the market action, the price action today. We are seeing a bit of an uptick in where nat gas futures are trading, up more than 4%. What do we point that down to, Stephen? Does it have anything to do with what we were just talking about the potential ramp up of supply and some of the dynamics vis-a-vis Europe?
Well, actually, I think it does have something to do a little bit with LNG. There's a new liquefied natural gas facility starting up in Louisiana. That's increasing demand a bit. And so that is true that there is that demand factor to play into it. But also, U.S. gas it's seasonal. And it's getting cold. And there are forecasts for, potentially colder weather. In January, you saw U.S. natural gas prices jump to the highest level in 2 years on Friday. We're up another about 4% right now, 4.56% right now, because the forecasts are showing less warm in the short term and maybe a little bit more cold. So those things together are driving the prices up. But over the long term, the market has been quite good at matching demand. And so if you do see a giant surge in U.S. LNG exports, it's very likely going to see supply, domestic production, drilling, also increase as well, because it's so easy to bring those rigs online. And that could help temper any increase in prices.
Interesting. And I also learned a new function from you today on the terminal, WHUT. That's an interesting terminal function if you want to check out the weather forecast in the U.S. Bloomberg, Stephen Sichinski, thank you so much for the overview. Now, San Francisco Fed President Mary Daly says she's very comfortable with 2 rate cuts in 2025. She told Bloomberg that Donald Trump's proposed policies will not be the factor that guides her forecasts.
It's about the data. It's always about the data for me. We don't know what the incoming administration is going to do. New administrations, no matter when they come, always put a slate of programs together. And really, as a policymaker, I want to see the net effects once I see clarity about what those policies will be. So I was focused on the incoming information and what it means for the outlook. And today, I feel like we've got policy in a good place, the economy's in a good place, and we are prepared for whatever comes before us.
What happened in the past 3 months that caused the Fed and perhaps yourself to be much more concerned about the stickiness in inflation?
Well, the data happened. And you look at the data, and what's happened is that there's 2 things that have occurred. First of all, the economy remains in a good place, and the risks to the outlook are equally balanced between a risk to inflation or a risk to employment. That's where we wanted our goals to be. And we adjusted policy when we had confidence that inflation was heading down, and we adjusted policy some more to ensure that we have a balanced labor market that continues. So that's where we are. But then the data on inflation have been coming in a little slower. I wouldn't even say sticky or stalled. I would say the progress is just slowed relative to what we had wanted. But that's a typical pattern. It's bumpy. As you get to the, from 2.5 or 2.8 to 2, it's just a bumpy path. Yeah, go ahead. Please.
But at the same time, some people were wondering if there was this stickiness. And I'm looking right now at, say, the Cleveland CPI now, and it actually has ticked up for the month of December from November. There was this question, why did the Fed cut it all?
Sure, and again, I'm going to reassert that it's bumpy. Remember earlier in the year, we had 2 months of data and people said, oh my gosh, it's reaccelerating, and then we had it come down. So inflation data, you can't focus on 1 month or 2 months. The most important thing for me was that we needed to recalibrate policy. I saw this as a close call. Was 75 enough to be the recalibration we were looking for, right-sized policy to meet the economy we expect, or do we need more? Ultimately, I determined that the 100 basis points was really the right level. Now I feel we've got that recalibration phase behind us, and we're in the next phase. And the next phase is really looking at the incoming information. We can return to a more typical pattern of gradualism for the Fed. We've practiced that where you with a lot of uncertainty, you adjust the policy rate, then you wait watchfully, and you see what transpires, and then you make further adjustments. That's the phase I think we're now entering.
That was San Francisco Fed President Mary Daly speaking to Lisa Abramovich. Well, coming up, Mozambique bracing for more post-election protests as the Constitutional Council prepares to rule on the country's disputed presidential vote. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Mozambique is bracing for more protests as the country's top constitutional body prepares to validate its disputed election. The Southeast African nation has been rocked by an unprecedented wave of violence since October's vote, leading to at least 130 deaths. For more, let's bring in Bloomberg's Ondiro Aganga. Good to see you, Ondiro. I just saw a flash come through saying the Mozambique Council will be proclaiming the final election results at 3 p.m. today. What can we expect from them, and what is the likely ripple effect?
Hi, Jumana. So we are hearing local media speculate that the Constitutional Council is going to uphold the elections from these results. These results saw the ruling party win by a majority. The presidential candidate, Daniel Chapo, won the presidential vote by 70%. And we had Venancio Mondlane, who's the opposition leader, only garnering a dismal 20%. This did not sit well with him. He went to the Constitutional Council challenging this result, citing election fraud. And leading to this verdict, tension has been rising in the country. We are seeing Mondlane through his Facebook Live say that the decision by the council could either lead the country to peace or plunge Mozambique into further chaos. And he has announced the next phase of protest, which he calls Turbo V8. And this is supposed to continue applying political, social, and economic pressure on the government. But on the other hand, we are also seeing civil society call for dialogue. However, the incoming president has not been sworn in, hence he has no constitutional mandate to cut a deal. And the outgoing president has successfully served his 2 terms. He has no incentive. Despite having a phone call with Mondlane, Mondlane maintains that the basis for any conversation is electoral truth to be revealed, which should reflect his victory, and that's a non-starter for dialogue.
Yet Mozambique bonds have been sustaining losses. There have been demonstrations going on for a couple of months now. What has been the impact of these demonstrations and the political standstill on business and the economy?
Jumana, several sectors are taking a hit. Take tourism, for example. December is supposed to be their big seasons. Tourists are supposed to come in, enjoy their December season in the beaches. However, hotels are operating below capacity and there are no confirmations. You also look at a key project like the natural gas project they have with Total Energy, $20 billion, facing further delays. And this is a project that was expected to increase foreign exchange earning for the country, create jobs for the youth, and also grow the economy. However, further delays put all that at risk and also jeopardizes Mozambique's debt servicing efforts. You also have reduced revenue collection from the protests, and the government is saying that there could be delays in payment of salary. The Business Council is saying $400 million has been lost so far. And Standard Bank has cut the growth focus for this year to 2.5%, down from last year's 5%. And this just goes to show how much these protests are straining the Mozambican economy.
Yeah, I mean, that is a cut of more than half of the growth forecast for next year. So pretty significant in the context of the outlook. Bloomberg's Ondiro Aganga, thank you very much. Now, coming up, trade concerns and fears over the Fed's policy path saw European stocks suffer major declines last week. We'll discuss what's driving the losses and the outlook for 2025 next. This is Bloomberg.
Cars are integral to Germany's modern economic and industrial identity, a pop cultural export and political lightning rod. 87-year-old Volkswagen embodies this on a global scale.
It employs 680,000 people around the world. It has dozens of production locations. Millions of people, workers in other industries, are reliant on the business that they get from this company.
It owns several household names. Some of those households are very wealthy indeed, while others descend from VW's principal demographic.
There was a big celebration in Germany to mark the 1 millionth people's car since the war.
The whole idea of the people's car was that every individual in the country would be able to afford one.
Decades later, in 2023, VW's portfolio generated 320 billion euros in sales, equivalent to about 7.5% of Germany's entire GDP from that year.
Well, that was a look into how the rise of China's EV industry has left German car giant Volkswagen in a tough spot. And of course, it's not just Volkswagen. For most of the show today, we've been talking about what's been happening with Nissan and Honda, the potential merger there. So reverberations across the globe. But subscribers can watch the full documentary on the terminal or at Bloomberg.com right now. And it will be up later on the Bloomberg Originals YouTube channel. All right, let's turn to Europe, where stocks got pummeled last week amid fears about the Fed's policy path, not just in Europe, but in the U.S. as well, and the outlook on tariffs and concerns about the region's biggest companies. So for more on what's driving the losses and investor expectations for next year, Farah Al-Bahlawi, who leads our EMEA equities coverage, joins us now. Good to have you in studio, Farah. Taking a look at how stock markets have done this year, the U.S. S&P is up, say, around 25%. The Euro stocks up only about 5%. So another year of underperformance. Is it the economy that is holding European markets back? Is it the political noise after the European elections, the summer French elections, German upcoming snap elections? What's going on?
It's all of the above, Jumana. There's so much going on. That's pretty good for the U.S. and so much going pretty bad for Europe. And that's helped the S&P 500 rally and the Stoxx 600 underperform it by one of the worst, one of the worst years on record.
Yeah.
So Europe has geopolitical issues, at least with France. We've seen elections, and the fallout from that still has not been resolved. We have Germany, the elections are still coming up in Feb. And on the flip side, the economy is also not doing very strong, while the U.S. is doing very well. And you mentioned Novo. You have a lot of leadership, strong leadership in the U.S. coming from AI, coming from the tech sector. And in Europe, we just don't have something similar. Yeah. And in fact, Novo slumped pretty massively last week.
That was one of the main underperforming stocks on Friday I saw. And again, a lot of concentration is in that specific stock. But then a similar phenomenon in the U.S. with NVIDIA. It sort of captures a lot of the concentration. Specifically on France and Germany, again, another interesting divergence there because the DAX has actually done quite well, despite the political noise and despite the manufacturing issues that we talk about in the auto industry. DAX up 22%, but the French index, the CAC 40, is tracking negative for the year. Will that be resolved, do you think, if the French Prime Minister manages to cobble together a government into next year?
I would say that investors are still pretty optimistic on Germany versus France for next year. The spread in France is it's a concern, especially for banks and insurance in the CAC that make up about 10% of the index. In Germany, you have China increasing stimulus, and you have expectations that the Chinese consumers' demand is going to come back. You have a new government that's potentially going to boost spending in Germany, help the local economy. But in reality, still, the DAX is mostly exposed to the global economy, which is part of why it's done pretty well this year. SAP, going back to that tech conversation we're having, is another positive for Germany that's helped lift the benchmark. But in France, you just don't have the same leadership. In fact, luxury stocks are still a bit of a question mark. The spread is still weighing on the banks and the insurers. And the question is, to answer your question, will the new government solve the issues? Investors are not so optimistic in the short term.
Yeah, what do you think the sectors that investors are most interested in being deployed in going into next year in Europe? Are they thinking about being in defensive simply because the European economy seems to be struggling? Or is this a potential to get involved in cyclicals because the ECB are embarking on an easing cycle now?
Exactly. From our conversations, a lot of people are expecting that there will be a lot of stimulus in Europe. You have rates coming down. You have Germany potentially increasing spending. So maybe Europe will see a little bit of an improvement in economic growth next year. So a lot of people are recommending somewhat of a barbell of cyclicals and defensive, but not across the board. Tech still continues to be a sector that's pretty favored.
Yeah, you mentioned SAP and, of course, ASML as well, the Dutch lithography maker, a big one, too, in the Stock 600. Farah, great to chat to you. Farah Al-Bahrawi, who leads our EMEA equity coverage. And a quick look at futures, more positive handover from Asia overnight. This is the picture today. S&P futures up 0.5%, NASDAQ up 0.7% as we get into the European session. But that was it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.